What's going on, guys? How are you? How are you doing today? I want to show you the best intraday strategy that you can use. So what I want you to do is to take note of the time frames that we're going to be using. We're going to be using the M15 time frame, right? After that, we are going to be showing you a pattern that repeats itself over two instruments that I'm going to show you. So first of all, let's go right into it, and I'll show you the pattern, and I'll go on the charts, and I'll show you again the instruments and the pattern in play. So let's get right into it. So right now, what we need to do is to understand that when you are looking at this particular pattern, what we need to see is a big drop or a big rise. After this, after a big drop or big rise on the M15, you need to see price doing this pattern where you see clearly three highs if it is a drop, and three lows if it is a rise like this. So these three ones, we are going to call them 3D, right? We are going to see this end. So we are going to be looking for a point of interest in the region of the third of the third low or the third high at this particular point. So we're going to be looking for a point of interest. This might be an order block, this might be a supply or demand or anything that you might think of, right? And we're going to draw a line here, which means we're going to be getting a pattern that looks like a flag or a pattern that looks like a pennant, right? In each and every one of these things that you are going to be doing. So what you need to understand are three things. You need to understand that you need to have three highs if this is a drop, and you need to have three lows if this is a rise. So the first one, you understand the rise or the drop, then you need to wait for these three ones. And remember, we are going to be using the M15, so this is going to be very quick when it comes to you waiting for this pattern, right? And after that, you're going to be considering this last low that price is going to break from this point of interest, and you're going to be entering on the retest of of this last low, as you can see here. So this is the pattern. You're going to be looking like this: 1 2 3, 3D, then break, then retest of this particular one. So this is where your sale is going to be. So let me just show you guys what we need to be what we need to be doing when it comes to these things, right? What we want to do is very simple. We want to see price moving in a certain direction aggressively. Then after that aggressive move, what we are waiting for is simple again. We're going to be waiting for something very simple again, which is a retracement, but that retracement should show us three distinct highs or three distinct lows that we can follow and that we can draw a trend line on. After drawing that trend line, we will then focus on the break that will follow. We will then focus on the break that is going to follow, either the break to the low or the break to the high, depending on the direction that you are going to. All right, so with that being said, let me just show you again what the pattern looks like and what you need to do for you to actually take advantage of that pattern, right? So without wasting a lot of your time, this is how it looks like: a drop, right? So let me just do this. So we have a drop, right? So this is the drop. Then we have a retracement, 2 and 3. So this retracement is going to coincide with a point of interest in this area. Then we see another drop. Then this last low that price is going to break is what you are going to consider as your trade, right? So you're going to sell at this particular zone, right? And it means that you're going to mark this as your flag or your pennant, right? You're going to mark this as your flag or your pennant, where you're going to do this and you're going to do this. So this will be your flag or pennant. This is the drop that we are waiting for. So we label that this is our drop, and this is our pennant, and this is our drop again, our break, right? And this is the retest that we are looking for. So this is the pattern that we are looking for. And without wasting a lot of your time, let's go on the charts. And remember, the charts, we are looking at volatility 51s, and this is found on the If you don't have an account, you know where to find the links in the description down below, and fund your account, start trading this strategy. So what do you see on V51s M15 time frame? Number one, you see this drop. right? So there's this drop, right? Then there is this one, the retracement, which is 3 points that are going back to the what? That are going back to the what? To the source, which we will use to find our what? To find our point of interest that is at the what? At the source like this. So this is the what? This is the source. And as you can see, we are waiting for price to then break the last order block or the last low that we are going to see. And the last low that was taken out is this one, where you are going to be seeing. Let me delete so that you guys can clearly see. So this is the low that price took out, right? When price took out this low, it came back and retested that low here and gave you 4 beautiful M15 candles. And what are you waiting for? You want price to get to the bottom of this flag or this pennant where you are going to be taking your take profit, right? Which means that you enter here and your stop loss is going to go where? Your stop loss is going to go above the what? Above these candles or above this structure that you are seeing here. So this is where your stop loss is going and your TP is going to go here. Very quick and very precise. So this is what you're going to do. Let me show you another one. So this is another one. What do you see? You see, number one, this is the first one, the first high of the retracement, the second one, and the third one here. So this is the 3 pattern that we are looking for. Remember, this, we are not really worried about this point of interest, but what we are worried about here is price breaking this low. When price breaks that low, what are you waiting for? You're waiting for price to go back to that low and give you a what? A retest. And the retest is going to be confirmed once you see this candle pattern that you see here, which is the railroad track. When the railroad track prints like that, you enter your sell position there, and where your stop loss is going to go is above the structure here, and you're going to what? To use this low as your what? As your take profit. And as you can see, that was achieved very quickly. So this is what you're going to do, and you're going to wait for the first aggressive move that you see and the first 3 retracement lows or retracement highs that you're going to see, and you use that as your what? As your guide to get the trade, or as your confirmation to get the trade. So you need to be very patient. And remember, we were looking at volatility 51s. Right now, let's go to V75. So you have to remember that these patterns work best on these charts, on these commodities that I'm showing you, and these commodities are found on Deriv. Go and open your account on Deriv and do what you do, right? So number one, we have this aggressive move, right? We have the 3 pattern retracement that we are looking for. And where is the 3 pattern retracement? We have this one, right? And we have the second one, the third one, and the fourth. We have 4 here, but it doesn't matter. Why? Because we are waiting for the break. We are not waiting for anything. So this is the break that came, and look at the retest. So let me just do this for you so that you can see. So this is the break that you are not the break of the trend line, the break of this horizontal line, which is the low break. Price breaks and price comes back. When it comes back, it gives you an engulfing black candle, which is that one. What do you need to do is simple. You just enter your sell at this particular point where your stop loss is going to go, above the what? Above the structure. Your take profit is going to go below the structure. So this is the structure that you're going to be looking for, and this is the structure that you're going to be trading. Look at this. You have what? You have 3, 1, 2, 3, right? And after that, what do you have? You have a break of the what? A break of the low. But unfortunately, price did not go back to retest this what? To retest this break, which would have given you a what? A move or an entry to this trade. But unfortunately, it didn't happen. So we are not going to be measuring on that because it did not what? It did not happen. And right now, price is here. And as you can see, we have the aggressive move here. What are we waiting for? We are waiting for the first low, then we are waiting for the second low again, then we wait for the third low around this area, which is denoted by this one, by this point of interest. So once we see these lows, number one and number 1, number 2, number 3, right? What are we waiting for? We will then wait for what? For a break of a high in this area, and after that break we wait for a what? For a retest, and we go up like that. So this is how you map it out. We wait for it to what? Play out. So this is what I wanted to show you, and this is a proper intraday strategy that you can use in your day-to-day trading. And I will see you in the next video. Shocks out. Bye bye.